All right. Hey, everyone. It's Monday. Let's get this thing started, shall we? So, I'm not streaming anymore during the AM session. That's why I was not on earlier today, in case you weren't sure. I mentioned that over the previous week. I'm only going to stream the AM session on Wednesdays because no one watches me. Okay. So, I need to use that time more productively. So, for the summer, especially because it's very, very slow. At least for me, no one shows up to my channel. So I'm going to, it's obviously streaming more doesn't help, right? My numbers go lower. So I'm going to stream my AM session on Wednesdays and my afternoon session like I usually do at this time. So if you're new to the stream, welcome. Let me just explain to you how this works real quick. So first thing I'm going to do is just run through the economic calendar, right? Then we're going to talk about the charts here. We're going to talk about Bitcoin. We're going to look at some other markets, all right, and update my analysis that I published on TradingView yesterday. Also, fun fact, I don't know if you guys saw, but I released my Merlin interview video. Not too many people watched it, but I wasn't expecting much anyway. I don't have much of a following, but it's out there on my channel. I have a 10-minute version which I'll probably release tomorrow, so you don't have to watch the whole thing if you don't want to. But it's interesting, and it's a fun interview. We get to learn a little bit more about him and how he uses his techniques and how he won second place at the ICTC 2025, which was really cool to see. So it took me a month to put that thing together, a month, because I had the B-roll took forever, the thumbnail took forever, like it just everything takes forever for me. So anyway, but that's on my channel. All right, so let's get in here. Let's do this. Let's begin with the economic calendar. Now, this week, if anyone wants to chime in on other important events, there's only going to be really one main event that people are going to be paying attention to this week, and that's the tariff agreement thing, which is Wednesday. Okay, so the market is likely to be erratic and very hard to deal with. Hey, Grego, going up until Wednesday. Also, any surprise tweets or anything like that can come out and change things quickly. So you want to be. It's not a good. I would say it's not a good week really to day trade, unless you're going to take your quick bite, get in and out. Like Wednesday is going to be a tough day. I'm telling you right now. When I'm looking for day trades, it's going to be tough because of this situation. Now on Wednesday, I'm probably going to just stick to a smaller size because of the nature of the day, because of what we're going to be dealing with price action wise. But with that account, with that Apex account, what I'm planning to do, because I'm not going to keep paying a subscription because it's just, I'm not getting anywhere with it. So what I'm going to do is I'm planning to increase the size dramatically. So instead of starting out with a micro lot, I'm more likely after Wednesday, because I'm not going to do it on Wednesday, because if I'm wrong on Wednesday, I'll blow the account like in 2 seconds. But after that, what I'll do is I'll start with like maybe 2 or 3 micro lots. That'll be my initial position. And then I'll add like another 3 or something like that if I capture a broader move. With the Trade Scanner Pro, that works out well when you use the filtering method. I mean, if you looked at my trade on, what was it, on Wednesday, the previous Wednesday, I mean, the market moved. I captured like what, 40, 50 points, something like that. That's a big move for the Nasdaq, especially in this type of price action. That's a nice move to capture. And the move ran. I left a lot of money on the table. That move ran 80 points. If you go back and watch that stream. So anyway, if I capture something like that with more than 5 micro lots, then you'll start to see some decent P&Ls. And by the way, one thing I have to mention about Apex is when you beat the eval, as I've learned, when you beat the eval, it's really sort of a gimmick in a way, because you have to basically do it again. When you get to the second step, which is the performance account, they call it a PA account, you have the profit objective is $2,500. So essentially, you have to beat the eval again in order to get any payouts. So even with a sustainable strategy, like the slow strategy, it'll take forever. The only thing with that is you're not paying, since you pay a setup fee, you're not paying monthly subscriptions, unless you can choose that if you want to, which is cheaper than the setup fee. But my point is, in order to receive payouts, they force you to take bigger size. Like if you want to receive payouts in a timely manner, it's a very tough game. But anyway, I just wanted to mention that. All right, so let's So as far as the economic calendar goes, unless anyone wants to ask any questions about anything else, Wednesday is really like the big day. So going into that is going to be hard. And then whatever results in that day will probably set the tone for the market for the remainder of the week. All right. So for day trades, again, you want to be looking for when there's greater volume and wider moves, meaning your average true range is greater. When you get these average true ranges on these 1 minute charts of like 4 points, it's pretty bad. It doesn't mean that the market doesn't move. It's just the market spends a lot of time churning, is what it means, and it can be very hard to hold through trades and stuff like that. It's very easy to get shaken out. So yeah, so let me know if you have any questions about that. Let's now get into the charts, right? Because we're sitting here looking at charts. My trading view analysis yesterday, I don't know if anyone took a look at that, but basically I said Bitcoin is in the process of breaking out and it just refuses to pull back. I wrote that analysis when we had this green candle over here. Now, clearly, we're pulling back a little bit now, right? But when I meant pullback, maybe I should have been more specific. A pullback should be like this, right? What I have illustrated here, which is what I published on my chart on the TradingView article. A pullback to here, which is what, like 105 area? Yeah, the 105 area. That would be a mini pullback, right? And not even that. If we see such a pullback, which is possible now with this bearish candle situation, we're looking at the midpoint of this consolidation. That is not a good area to be looking for swing trades. You guys know why? Because midpoints are highly random. Now, for day trades, there's always opportunities. It just depends on the time frame that you're working with, and it depends on what's happening on this time frame. And you have to compare the two. Like right now, for day trades, shorts would make sense in this situation, right? You're looking for bearish trend structures. You're looking for lower highs. In fact, we could take a look at a 1 minute chart real quick. That's a monthly chart. A 1 minute chart, right? We'll probably see something bearish on it. Okay. I mean, look, this is not bearish. That's bullish. But the previous price action going into that, those are lower highs and lower lows, right? It's changed. Now there's higher lows and higher highs. So now it would make sense to look for longs on the small time frame, right? Small time frames, they change a lot and they change quickly. You got to pay attention to those structures, right? So anyway, the point is, at some point, if that trend structure changes, meaning you start breaking support levels on that trend structure, then you're likely going to see a next, a candle breaking this structure and working its way toward 105. Again, that's a minor pullback. If it can produce something like that, again, day trade longs would be interesting in this area, right? More risk controlled. Or if you get continuation patterns, right? I'm anticipating the breakout because we've broken out of this trend line. I drew this trend line here on this consolidation. It's broken, as you can see, right? It broke a few days ago or whatever. It broke here, and it's just been consolidating ever since. That break is meaningful. If we can't break that low, like if we can't break below this low over here, let me make that bigger on the chart. We can't break this low right over here, then it's probably going to produce a higher low. If that's the case, what you're looking for then is a break of these highs. What I'm describing are confirmations. If those highs break, then this thing is on its way to 113. Or I should say the probability of this thing reaching 113 is much greater if this high right here breaks. And that's the 109.7, or basically you could say 110, right? If that thing can clear the 110s and it closes strong in that scenario, you're probably looking at a test of 113 area or maybe even higher. There's no way to know how far it will go. All we can look at are these higher low structures and say, okay, higher low, higher low. It's pointing. When you ever see higher lows, can I get the arrow over here? That would be nice if I get the arrow. Whenever you see these higher lows, it's usually pointing to higher highs that are likely to follow, even though we have this red candle right now. All right, does that make sense? So don't be fooled by this. You really need to pay close attention to your time frame and what type of time frame you plan to participate on. If you're looking at small time frames, 1 minute, 3 minute, 5 minute, anything like that, then your outlook and your strategy is not going to be the same as if you were looking at this time frame and trying to align with this time frame. You have to pick a time frame to align to, a larger time frame. That could be the hourly, like I do when I do my streams in the AM where I trade the Nasdaq, right? I use the hourly to give me some perspective, and I use this time frame for support and resistance levels. You have to have some sort of perspective from a larger time frame. For swing trades, it's going to be this time frame, right? And the levels on this time frame. So that's why 105 is a level. And if it breaks 105, you're looking at the 102 to 100. Those are the levels. It's that's it. So it's either one or the other, right? If it breaks that 102 to 100, if it breaks that, you're looking at 95. Now, another interesting thing that I want to point out with this is the Trade Scanner Pro signal. So the Trade Scanner Pro called this long the Thursday before, like back here. You see that? Which was the date of, what is that? The 21st? June 21st. Okay? June 21st, there was a pin bar. See that? And that right there, after the pin bar, the outside bar, or it's not really an outside bar, but this large green candle prompted the signal from the Trade Scanner Pro. Now that's a tough signal to take. And as you guys know, I always recommend the filtering strategy, right? And if you used the filtering, there was an opportunity to get in around here somewhere at the retest of the blue line. Of course, you'd have to refine this with a smaller time frame. Now, since then, there has been nothing to do. The long signal is still in play. And this may turn into another opportunity for a long on this time frame. So, I mean, look where the blue line is. It's right in the middle of the consolidation, right? At that 105 area where there is a support, a proven support, right? Proven by this price action here. So does that make sense? So this area right here would be a spot to look for swing trade longs, and you can capitalize on the Trade Scanner Pro signal that's been in play now for over a week and a half. Ideally, it would be nice if you got a signal in here somewhere, some sort of price action confirmation in that area. That would be ideal. So keep an eye on this, because there are some potential opportunities coming here, and you have some guidelines. Now, it's interesting to see where the Trade Scanner Pro drew its price objective, and that's at 115.4, right? 115. So it's projecting a break of the 113K area. It's more optimistic than I am. But that number is based on previous price action. That's what it's calculating. And it's looking at those price ranges, and that's how it comes up with that number. Also, it looks at it relative to the risk, of course, too. The risk is part of that. So that's where it's projecting the price objective. Does it get there? I don't know. The point is, if it gets there and you're along, that's a good place usually to take something off the table. It's right there, very clear on the chart. All right, does that make sense? And this signal from the Trade Scanner Pro is in line with my broader analysis, right? It's not like the Trade Scanner Pro is calling a short here and the broader trend is bullish. As we can see, the Trade Scanner Pro called a long, right? That's what we want to see. We want the confirmation for the broader trend. This trend is clearly bullish. It hasn't changed. It hasn't changed in months and months. It's bullish. We're just consolidated. Whenever you have these bullish consolidation situations, you want to look for those lows wherever those supports are established, and those are high probability long signals, right? So right now we're just flirting with this range or this consolidation high, and we're not really doing anything, right? We pull back 1,000 points. All right, that doesn't really count for anything. So like I said, you have to put that into perspective, and you have to decide how you want to participate with that. Day traders are not going to participate the same way as swing traders. You have to make sure you separate the two. People that are all anxious about shorting this, it may be worth something, but it's a low probability because this is not a bearish trend. And people are just itching to buy this thing, right? And then you have Michael Saylor and everyone else always talking about Bitcoin is going to be $1 trillion by tomorrow, and the U.S. government's going to print money forever, and you have all that stuff, all that propaganda, which obviously it creates a perception of the future. And this thing just refuses to pull back, right? We could talk about all kinds of fundamental this and fundamental that and store of value this and ecosystem that. I mean, there's a lot of things that are positives that we can argue, but I don't like to bank on those things. Like for the broader picture, sure. As an investor, those are nice things to tell your friends about. But risk, I like to define risk by looking at levels and looking at structure because it gives you a pretty accurate view of risk. And that's the main thing, right? Now, investors, a lot of times, these long-term investors, they don't really care about risk. They're just like, oh, I'll just put some money in, and if it goes to zero, it's okay, I can afford it. That's their risk. That's their risk assessment, right? So it's just been working its way higher and higher and higher. There hasn't been a lot of pain in Bitcoin, especially recently. So, but at some point, when this thing completes its fifth wave, I wouldn't want to be near this thing. I don't care how great the fundamentals are. Right? There is a psychological aspect to this. And that's why you got to keep track of these wave counts. When there's a fifth of the fifth wave, whenever you can count 5 waves, that usually means a corrective structure is on the horizon. And at this magnitude, it's a very large corrective structure, right? If this wave 5 completes, like I have this 5 of 5 up here, if that completes, then basically what it's telling us is this one gigantic wave 1 impulse that dates back to 2017, right? It's the completion of that impulse from the beginning of Bitcoin, basically, right? It's the first impulse wave. And that means a broader wave 2 would be on the horizon. And that can, who knows how far that can pull back. It's hard to believe, but again, don't let fundamentals blind you. Because the thing is, just to kind of point something out here, when we were at 76K earlier in the year, back here, there was no reason for this. There was absolutely no reason for this. Okay. Now you say, well, yes, there was all that tariff stuff. Yeah, okay. But that really shouldn't have an effect on Bitcoin fundamentals. Not really. It just threw a lot of uncertainty. And of course, when they can't explain it in Bitcoin fundamentals, you know what they start? Well, the stock market sold off and people had to sell their Bitcoin to cover their margin calls. They always come up with some kind of excuse, some nonsense. But the thing is, this was fundamentally not really, it shouldn't have been there. Okay. If Bitcoin is as great and as strong and blah, 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 as they say, and this and that, you shouldn't have had this pullback, right? But the thing is, it was there. The pullback occurred from 109. What was the high there? 110 or 112 was the high. Or what's the high over here? What is that high? 109, 358. That was the high. Okay. It went from 109 to 76K. That's a pretty steep pullback, right? And that's the type of risk you're facing. Now, that's not even a broader corrective move, right? That's my point. So if this thing completes its wave 5, that's where, the risk is the greatest and where you should be taking money off the table, in my opinion. But I always say that at highs. That was profit taking. Everyone took profit. Okay, that could be, Kai. I mean, whatever it was, my point is, whatever it was, if you're stuck on fundamentals only, like this should not have happened. Okay? My point is these markets are based on perception of the future. So profit taking, tariff stuff, whatever you want to, people losing money in the stock market and they had to cover their margin calls, whatever excuse you want to assign to this thing, the point is it's perception of the future. So right now, things still, these charts are very strong. Bitcoin is very strong. There's no question. It doesn't pull back in any meaningful way, but it doesn't mean that it won't soon. Okay. So I'm not trying to scare people, or I'm not trying to tell people, oh, don't touch this thing. There's plenty of opportunity on multiple time frames. Just understand the risk. And really, I think the greatest risk is really just for investors. Because if you're buying it up here, like at an investing magnitude with larger amounts of money, I think you're nuts. These are just not investing levels. These are high risk levels. It's okay for day trades. It's okay for swing trades. But to throw a bunch of money in this thing, oh, I'm going to put 20K in because whatever. I mean, and especially using leverage, forget it. Risk is too high. Okay. I mean, that's that. If this thing has some unexpected pullback because perception changes for some strange reason, this thing can easily test 100K. This thing can break and test 95K. It can do that. And that would be a much more attractive opportunity. So bears have a good argument. No matter how you look at it technically, it's high risk for going long. Yeah. I mean, that's the thing. So you have to be careful. My point is, when you listen to some of these Bitcoin maximalists, look, they make great points, and I'm optimistic about Bitcoin fundamentally. Sure, there's a lot of great things about it, and some of these altcoins too. They have great ecosystems. There's a lot of potential. I've been exploring a lot of Web3 stuff. Sure, sounds great, but it still doesn't change the perception of the future as far as how economic forces change. Right? High interest rates can be a problem. Inflation can be a problem. All kinds of things can be a problem, right? So that's also things that you have to consider, not just blind, oh, Web3 is the future, and that's it. So anyway, that's my Bitcoin outlook, guys. Let me know if you have any questions about that. Now let's start looking around at some other markets. If you have a market you'd like me to take a look at, let me know now, and I'll put it up here on the chart. So let's start with, let's switch this over, and let's take a quick look at the S&P, right? So I'm going to switch to I'm going to do the ES1. This is the S&P futures, okay? This represents the stock market, basically. You could look at the SPY, whatever, Nasdaq. It's all the charts are going to look very similar. This is the daily time frame. Now, as you could see, I mean, this has been just nonsensical. This was the tariff situation back here, and it's just been nonsensical ever since. Nonsensical meaning it doesn't pull back. These pullbacks are minuscule. So this is what makes it encouraging for people to just buy any pullback, right? Until it really pulls back, right? Until you're caught in this, and then you're at the mercy of the market. So the higher it goes, the higher it inches up like this, the more risk adverse I get. So what's Kai saying here? Kai says, and yet I remain bullish big picture. I think inflation is the main driver behind Bitcoin going higher. All the West can do. Right. Well, right. So there's I agree, Kai. There's certainly a situation here with this debt situation. There's certainly a situation. We saw that bill get through the Senate, whatever. Again, more money, $5 trillion ceiling, whatever it was. So it's just like we in this country there is no we pay it back. We just borrow more. That's it. That's it. That's the policy. Borrow more. Pay it back. What pay back? We don't pay back. We just borrow more. So I don't know. It doesn't make sense to me. I'm not an economist. It doesn't make sense to me. But I don't know what I don't know what their strategy is. I don't understand it. But hey, whatever. All we can do is manage risk. So my point is with the S&P, right? And the S&P and Nasdaq have also been benefiting, right? This is also a sign of inflation. As the dollar loses its value, assets like this are going to rise. There's just no way around that. So it's not really based on a healthy economy. It's based on the dollar losing its value. And you have to put your dollars into something. So stock market is one of those things, right? Now it's trying to pull back here, as you could see a bit, right? But this really doesn't mean anything because we've seen attempts before to pull back, right? So now maybe they're just exiting before Wednesday because they want to see the outcome on Wednesday. Maybe Wednesday sets the tone for a broader move. It's very possible that when you see moves like this, that's like a hot air move. That's all holiday nonsense. There's really nothing behind that. Okay. Yeah. Yeah. Right. Right, Kai. This is just hot air. Okay. This is great for people who have 401ks and oh, look at my 401k. I'm getting rich. Right. It's great until the market goes against you. Now, moves like that basically can be given back in an instant. Right. And all you need is some negative news coming out of that tariff situation or a surprise tweet that sets the tone. All you need is something like that. And this thing's pulling back. Right. That's why these are tough areas for stocks, investing in stocks, investing anywhere. This is just a tough area. We're not at any type of support. Our first support on the S&P, on the futures, you're looking at 59.59. That's what, a 300 points from here? That's a huge move on the S&P. That's a pretty big move, right? And that would just be a normal pullback. Like that wouldn't even be a major pullback. Pulling back to this area right here, just pulling back that area, that's not really a big deal. Okay, this is a bigger deal, and that you see how that recovered, but it took some time and a lot of positive news and a lot of nonsense. So just keep in mind the only thing we can do with these charts, right, in this situation is either you're going to day trade and try to take your small bites, or just stay out. That's another option. Just stay out because these are highly vulnerable. And like I said, well, why not short it then? Because could have said that here and here and here and here. And these shorts, bad idea, right? I'm sure plenty of shorts got involved over here. They tried anticipating that resistance to hold, and they got squeezed. So, you know, this thing is not a short until you really start breaking support levels or showing some kind of clear cut short setup. There's just nothing there, right now. And I wouldn't bet on the level because, it's just with this irrational environment, you can't fight it. You can't fight it, right? So just respect the momentum. And when it turns, just be prepared. That's all. Have your risk under control. Don't be blind. Don't let all this propaganda blind you. That's all I'm saying. The charts are pretty clear as far as risk. We don't know where the future is here, but the risk is pretty clear. And I'll always say that at highs. Okay. And when we're pushing lows, if you go back a few months, I made a video, I streamed it. I said how I'm buying the bottom of the Nasdaq. I made that video around here somewhere. I was a little early. All right. I was a little early, but I made that around here because that's what you do when the market's pushing lows like that in a dramatic way. So, all right, that's S&P. There's really not much to say about it besides that. Let me know if you have any questions or if it's relevant to like your stock portfolio or something like that. Let me know what stocks you have. I can maybe give you some perspective. All right, let's take a look at, let's see, that's S&P. Let's take a look at the bond market, right? The bond market's important. So we're going to look at the 10-year note futures. Have they changed? Let's see. I mean, this, every time I look at this, right? I've been looking at this every week. We're still inside of this range. So even though there's movement happening in the range and it reflects some movement in interest rates, there's no dramatic changes here. Hey, Axel, can you look at Uber? Sure. I'll take well. All right, we'll take a look at Uber. I haven't looked at that one in a while. AMD, I'm going to suspect it looks like the Nasdaq since it's a heavy tech stock. Wave count could wave 5. Well, all right, well, that's a good question, Kai. I'll go back to that. Good question. If I forget, remind me. That's a good question. Wave counts could be tricky because they're so subjective, right? And then I'll explain that situation. So I'll run that after this. Let's take a look at this real quick. Just this bond market situation. I know it's boring, but the bonds, when something changes here, that's probably going to be the signal for when the market is going to make a broader move. Because I mean, look at this, right? We're stuck inside this range. So rates are basically fluctuating in a range. When bond prices pull back like this, that means rates rise, right? But rates have been much higher, and on bond prices at one time were much higher. So this just doesn't mean anything, right? We need to see an extreme move here, and I guess the bond market's waiting. So there's not much to say about this until we break a support, which means rates are now pushing toward the high. If we could break that support, rising rates, which no one likes, especially the administration, they want lower rates, right? So we need to see bond prices rally above this part of the range or even this part, and that means rates would be lowering. I mean, we can compare this to the yield, right? US 10 yield, US 10Y. This is the opposite, it's the inverse. This is the yield, this is the interest rates. They're not doing anything. So we could take a look at a weekly time frame. This is a weekly. Look, there's a signal on there from the Trade Scanner Pro. The Trade Scanner Pro is calling for long interest rates, right? Trade Scanner Pro says long. Euro CHF seems to, okay, that's good to know. So there's nothing here. You know what I mean? It looks like it's poised to break higher. And if rates break higher, then you're probably going to see problems, right? Rates break higher, that's supposed to work on correcting inflation, but it also, people can't borrow money. Banks are going to have a hard, banks depend on lower rates, especially because they're long bonds. It could be problematic for them. So keep an eye on that. Franc pairs in general look interesting. Oh, okay. Okay. Yeah, I guess if they borrow what they borrow the franc. I know, is that like some kind of sign for like global borrowing? Maybe other countries besides the U.S. I don't know. Let's take a quick look before I go to Bitcoin. Let's take a quick look at the dollar index, because the dollar index is a big piece of this puzzle. Now look at this. This is the weekly dollar index, right? I mean, so we see the stock market rally, and coincidentally, well, maybe not coincidentally, the dollar has broken this range and has gone what looks to be significantly lower. But this is relative to the basket of currencies, right? So it's not just the dollar; it's the dollar against whatever, what the G7 currencies. I don't know what's even in the basket. But at one time, a few years ago, 4 years ago, the dollar was lower. Okay, it was a lot lower, relatively speaking. So, but this break is certainly not a positive for the dollar. It's trying to turn around again, as we can see. We have this weekly candle. Now, of course, this is just today. So the previous week, we have a bullish pin bar, all right? And we broke the high of the pin bar, as you can see there. So that's technically a long signal for the dollar, but the dollar is inside of this bearish momentum structure. So that's not exactly something that I'd be excited. Like if this was another chart, if this was a Nasdaq or something like that, I would not be excited about going long something like this, right? Really, what you should be doing here is waiting for the next short setup. If the dollar changes its structure, or if it's going to try to, the first thing it needs to do is break above these highs here. Right? It's the first thing it needs to do technically, if it's going to prove anything. So just keep that in mind. Switzerland is a flight. Oh, okay. Relatively speaking, so Kai is very into the macro view of things here. It's one more sound fiat currencies. Okay, that's interesting. That makes sense. The Swiss franc. That makes sense. So the dollar, again, this move on the dollar is meaningless until it can break out in this area here. It's going to have to do that if it wants to prove anything. So again, we can't really use fundamentals to forecast these things. The chart just has to do it or not, right? If the chart changes that structure, then that implies something about the fundamentals. That's how I like to use charts. Now, it's funny, people don't like charts, right? It's very hard to sell a chart. People rather hear stories and fundamentals. People would rather hear, this thing like that Kai is saying about the Swiss franc and what it represents as far as global debt and blah, blah, blah. People would rather hear that than look at a chart of the dollar index proving a change, right? Because people just see lines. But it's important to understand that structural change on the dollar is implying something about the fundamentals. And it will tell you way sooner before some talking head fake guru decides to start talking about it, right? So pay attention to this dollar, because if this, now, based on its current structure, I would anticipate that the dollar should go lower if this structure stays intact. If the dollar goes lower, that means you should be seeing higher euro, higher Bitcoin, higher S&P, right? You should be seeing all those things. But if this dollar changes its tune, then that could be the sign of the broader corrective move across everything else against the dollar. A strengthening dollar means lowering inflation, right? All right, so we'll see how that plays out. Keep an eye on, worth keeping an eye on. And the bond market has a serious effect on this. And the Wednesday situation, the tariff situation, is going to be an important factor in how this chart plays out. So keep an eye on that. All right, let's move along and let's take a look at gold. XAU. Oh, no, actually, no, I said Bitcoin. We're going to do Bitcoin, right? BTC USD. Let's go back to Bitcoin. We'll go back to here, right? Bitcoin. It's a clean chart, right, without my analysis on it. And well, actually, no. Let's go back to my analysis because I have the wave counts on there. So Bitcoin, I believe that's my Coinbase chart. Yeah, right, with all my analysis and stuff. Let's go back to the daily time frame. So Kai asks here, and then I'll get to the Uber one. All right, the guy that asked about Uber, I'll get to that. Axel. So the way I have this, Kai was asking, could this be in the wave 5? Let me see. Let me go back to his question. Wave count, could wave 5 be in over or go much? So here's the thing. Wave, it's very subjective, Kai. I suspected that the wave 5 situation was back here originally. Okay. But I was wrong because we went to 76K and turned around, and then we put this structure in. So while noticing that there was a wave 5 structure, it at least put me on the right side to anticipate some type of pullback. The magnitude of the pullback was wrong because now it looks like this entire structure that we have here is this wave 5, the broader wave 5, right? So we can count the subwaves 1, 2, 3, and then we have 4, which is this consolidation that we've been in for some time. And now we're looking for the 5th. Okay, the 5th of the 5th wave. That's where I'm at with this. Now, we still have to count 5 waves, right, after the breakout, or maybe this could be maybe wave 1 of the 5. We could be in the wave 1 of the 5 of the broader breakout. Wave 5s can extend. That's why I'm anticipating 113 or 120 for this broad wave 5 completion. Again, that's just an estimate. It maybe. I don't think we're in that full extension yet. Like, I don't think that wave 5 is in play yet because we're still inside this consolidation, right? But this push above, right, and this attempted breakout, that could be the wave 1 of it. So if that's the wave 1, all right, and we're fooling around in wave 2 right now, which is very possible, then we're looking for a wave 3, which is usually the extension, right? A little mini pullback, and then one more leg, right, higher. So that's why I'm anticipating 113 or 120 area, somewhere between there, to be the completion. I could be wrong. Maybe it goes higher than that. I don't know. But the thing is, when we're in that 5th wave and we can clearly count 5 waves inside of this structure here, when we can count 5 waves inside of there, I wouldn't want to be anywhere near this thing as far as long. I know investors are not going to get out. They're just going to stay in this thing because it's going to go up forever. But in my opinion, I mean, I don't have any Bitcoin as far as a long-term investment. If I had, I would definitely have been out of a lot of it on this next leg higher. That's what I would be doing. Of course, you want to hold on to something, and then you add back to it when you get the corrective move. But the next corrective structure, when we get that broader corrective structure, it's probably going to be a lot steeper than people expect. I don't know what kind of numbers. I have no idea, but a test of 95K or 80K is very probable, I would say, in that scenario. Okay. All right. No problem. So yeah, Kai, I'm with these wave counts, I'm usually wrong about the wave 5s, but because I use the wave count for guidance, it at least steers me to expect a corrective move coming. But I'm usually wrong about the magnitude, right? Every time I put a wave 5, it's usually the wave 5 of the 3, and then it puts in the broader 4, right? So, but it's still useful. It's still helpful because even if it's a wave 5 of a 3, I know I shouldn't be long. I shouldn't be going nuts going long up there, right? And I was warning people, just like I'm warning people now. I was warning people at these levels too. I always do. When we have resistance levels, especially when 5 waves can be counted, I usually write the party's over, right? That's usually what that means. So if you're not familiar with that, Google, you can actually, I mean, there's so much stuff, especially with the information that AI can pull up today is unbelievable. Maybe that's why no one follows me anymore. You don't need me, right? You could just do everything with AI, and it gives some pretty decent perspective. It's not perfect though, but it's pretty decent. It's certainly great for a beginner. So is now potentially, and yeah, so that's the thing. So like so you may not, I may not be right about the magnitude, but at least it steers me the right way. And a pullback comes, it's just not the magnitude that I'm anticipating, right? So that helps me do what? Avoid longs, right? Or it helps me avoid getting short at the bottom of wave fours, that kind of thing. Wave fours and wave fives are the most important waves. If you can learn how to identify them and work with them, they will steer you on the right side most of the time. You're not going to make perfect trades, but it at least aligns you with the probability, what's likely to come next, right? And it always helps. It helps me out every time, going back years, right? It's not like I just started using this. So anyway, all right. Let's take a look at Uber. All right, I don't know if Axel's still watching. Hopefully you're still there, Axel. Let's take a look at Uber. So this is interesting. All right, let's take a look at a weekly time frame. So, man, it's a nice looking chart. How much is this thing right now? $96. Huh. So I guess they're all excited about the driverless cars. I guess that's why this thing is so bullish. So usually there's going to be a correlation to the Nasdaq with this, but I mean, the Nasdaq and S&P were showing a little weakness today. This thing is just vertical. Look at this thing. Okay, so I mean, as far as when you see a chart like this, are these all-time highs? Let me take a look at a monthly. Probably are. Yeah. Okay. All-time highs on Uber. Now, first thing is if you're an investor, great time to take something off the table, right? At this moment, there's no reason to sell this thing. There's nothing on the candles that say sell, nothing. There's no red candle. I mean, this is just the beginning of the candle. It's the beginning of the week and the weekly, but there's no pin bar. There's nothing there, right? So there's really nothing to do. Where you're at 90, what's 97, 96.54. You're near the $100 whole number. So you better believe $100 is probably going to be a place where it's going to be a psychological inflection point. So usually a good idea, like if you're in, good place to put a limit order, or like 99 and a half. Good place to put a limit order just to let some go. Again, if you're worried about, where you should get out of these things. Now, selling an investment, there's tax liabilities. I'm not a tax expert. You have to figure out what works for you. Some people don't want to sell these things for that reason, because it's a taxable event, unless you have it in like a retirement account or whatever. But that's your business. So, but as far as dealing with this thing, there's really nothing to do here. I wouldn't buy this thing right now. Day trades, long. That's pretty simple. Looking for longs. Let's go to the smaller time frame. Let's go to the daily time frame. Right? I mean, it's a beautiful looking chart. So the next thing you want to do with something like this is identify support and resistance levels. The trend is clear, bullish, nothing bearish about it, right? So support levels, you have a range low over here, right? Nice consolidation low. That's far away. It's not even in play. What price is that? $60, right? Not even close. All right. Then you have this range breakout over here, right? So that's going to be a relevant level. It's nearby. How much is that? $82. So that's an area you want to pay attention to. That's a notable support level. You actually have like a higher low situation right off of it previously. Okay, so that's a notable level in case it goes back there. Don't know if it will, but if in case it does, that's probably going to be a nice area for swing trades. Okay, swing trade long in this area right here, 82 to 80 area, possibly an investment if you're thinking like that, but it's not the most attractive. Plus, remember, keep an eye on the Nasdaq. If there's a massive pullback in the Nasdaq, this will pull back too, most likely. All right. Now, another thing I want to mention. Okay, so when you have a situation where it's making new all-time highs, you say, okay, well, how far can this thing go potentially? Right. That's when you pull out your projection tool. So you go here, right? And you take out this the trend-based extension, and you start measuring some structures here. So we could measure this one, right? And you want to measure it from like a swing low. So you're at an inflection point right now, the 1618 relative to this pullback down, this pullback from here, okay, from this area here. But that doesn't, clearly there's no reaction to it yet. So it doesn't really mean anything. It's just an inflection point, a place to consider taking money off the table or anticipate some type of reaction. There's no reaction there, meaning selling. There's no reaction. Now, that's one projection. We could do another projection over here like this. Now, this is going to give us some more extreme levels, right? So you're basically looking at the 1.0 and the 1618. So you're looking at 115 is the whole number, is the 1.0. It's 100% projection. That's what that is. Okay? That's 100% from the measured move. So doesn't mean it's going to go there. It just means that if it goes there, that's a good place. That's a good profit objective to anticipate if it could get beyond the 100 point. And if it goes beyond that, you're looking at 136. Now, as far as time frame, like when can it do all that? Who knows? I have no idea. All right, but those are potential inflection points that you want to keep in mind for hold on, this thing's giving me a hard time. Okay, for price objectives. Okay, for something like Uber. So remember, any time between now and then, you can have a reversal. So like I said, it has nothing to do with forecasting at all. Does that make sense? Okay, hold on. I gotta my hold on a second. My mouse is giving me a hard time. I may have to charge this thing here for a minute. Yeah, this thing's gonna give me a hard time. All right, but so any questions about that? You see where I'm going with that? So 115 and 136 are potential price objectives based on the structure that's in place now. But that doesn't mean that it's gonna go there or go there in an easy way. There are likely to be pullbacks before those numbers are touched. The whole point of those projections are to give you an inflection point or a price objective to anticipate to take action if you see something that confirms that people are paying attention to the level. Like for example, right now, this is a 1618 level based on that previous move that I measured. So right now, you'd have your eyes open for a potential rejection of some kind. There's no rejection at this time. So if you're long, you're like, all right, let it ride. But if a pin bar develops tomorrow or Wednesday or something like that, right at this price area, or maybe right around 100, nice round number, whole number, then that's a sign that it's likely to pull back. And if you have a nice profit, maybe take a percentage off. But taking profit is really going to be a function of your general strategy. Like if it's an investment, then you're not going to treat that the same as a swing trade, and you're not going to treat that the same as a day trade. So, I mean, if you want to do you want to tell me like what kind of trade are you interested in? I could give you a little more context. Are you interested in a day trade, a swing trade, or an investment? Like, how are you looking at this? I'll be right back. All right, sorry about that. So, what do you think? And then we could take a quick look at. I personally look at swing trades. Okay, Kai. How about Axel? So as far as a swing trade goes, there's nothing here. Okay, there's really nothing here. As an investment, okay. So good. See, I'm glad you mentioned that. That's an important piece of information. So as an investment, there's nothing but risk here. This is high risk. I know there's a lot of great news. I guess they're all excited about the driverless cars. Okay, I get it. I get it. But the thing is, your supports are where your lower risk is going to be, and you're nowhere near. You bought it at 80 on the retest. Oh, okay. So you have some. Okay. That's nice. Great price. So now, but you're looking at it from an investing time horizon. At this point, I mean, if you're looking at it as an investment and not a swing trade, then no matter what happens, pretty much you're going to have to let it ride, right? That's an investment. So at this moment, there's nothing to do here. If you're concerned about a pullback, right, at least let the candles produce something here. You know, you want to see something like this, right? Something like this over here. Like here, so that if you see that type of structure develop, this will be a warning sign of some kind. But as an investor, I mean, what are you going to do? Maybe take some money off the table and hold on to some and then add back. You could do that. right? But if you see this type of pattern develop, you have like a failed high where you have like a couple of pin bars, you see all that? If you see something like that develop, especially around 100 or like around 115, since that's an inflection point, if you see something like this develop, then that's basically a heads up that says you need to do something, or you should do something, because a pullback is likely to follow, right? So if, as an investor, like one idea, again, I can't give you investment advice, but one idea would be to reduce your position. So let's just say, for example, you have 100 shares and you see something like this develop, right? And you have 100 shares from 80 and you're doing really good with it. So maybe you take 30 shares off. Maybe you sell 30 shares and you hold on to 60 or whatever, 70 shares. And then when it pulls back, you hold on to your 70 shares, you watch your thing pull back. Hopefully it stays above 80 and you have another opportunity to add back your 30 shares or something like that, right? Or you could dollar cost average into it. But I wouldn't put on more risk now. There's too much. This is not a place to add. You have a breakout. This is a place to ride what you got. Watch the 100 area. Watch for selling activity like this, which there's nothing there right now, and go with that. You just have to have a plan as far as how you're gonna, what are you gonna sell when you see the price action start to get weak? Because at some point it's going to start to get weak. You have to figure out how much you're going to sell, or maybe you sell on the way up. Maybe you put like small bits for sale. Maybe you put like 10 shares for sale at 100, another 10 shares for sale at 102, another 10 shares for sale at 105. Maybe you do something like that and you ease out of it slowly. Maybe it never gets to those prices, right? So that part you have to figure out how you're going to ease in or ease out, right? So at this point, if you're sitting on a nice profit, it's wise to ease out. It's always a good, even as an investor, I always think it's a good idea to take something off the table, and then when the market pulls back, you still have some shares, right? So you're still meeting your goal as an investor, and then you just buy more. Okay, does that make sense? All right, so that's Uber. Yeah, let me know if you have any questions about that. How are we doing with time here? So I have a few more minutes. Let's take a quick look at something like oil. All right, I'm going to jump over to oil. I know probably not a lot of you trade oil, but oil is important to look at because oil affects things, right? So oil has been on the rise a bit here, especially after all that drama we had not too long ago with this massive pullback in oil, right? Remember that? And since then, this thing has been just gyrating around here. There's a short signal on the Trade Scanner Pro, and it's giving another entry possibility here, right? In fact, this is what you'd be waiting for after the short signal, a retest of the blue line, right? As per my filter that I always talk about during my AM streams. So right now at this moment, you don't short this right now on that candle. That's certainly not a nice candle to be shorting. But what you want to see in this situation is a retest of this price area here, somewhere between the entry price and the risk, right? And then you want to see some sort of bearish reversal in this area. That's where you take the position based on the Trade Scanner Pro. This is a good example because if you're using the Trade Scanner Pro, this applies to any market, right? Same situation with Bitcoin, right? You wait for a retest of the blue line. Ideally, it goes beyond the blue line into the risk gap and then gives you a reversal inside of there. The reason why that's good is because it's a lot closer to your stop and you're taking a lot less risk, okay? Compared to taking it at the entry price and then watching it do something like this. This is especially important when you're dealing with small time frames like the ones that I showcase all the time. All right, makes sense? That's oil. So is oil a long or a short? Oil is very tricky because oil is very sensitive to geopolitical stuff and any other little thing that comes out. Oil jumps and jumps. It's very, very hard to trade oil on technicals alone. So it helps to just be aware of some of the things that it's sensitive to. Or if you're just going to play with technicals, then you really have to work on small time frames because this thing could do anything, right? It's highly random. So makes sense. So in this case, something like oil, there could be a shorting opportunity coming. It's just not there yet. Okay. And of course, I would use a smaller time frame. All right. So that's oil real quick. Anything else? Well, since you requested AMD, I'll take a look at AMD real quick. Why not? All right. So AMD, I'm guessing you've invested in AMD also. I don't know. AMD came back nicely. I mean, I was having a problem for some time there. Look at that. What a nice move on AMD. This is the weekly time frame. So, situation like this, I mean, look, you had this nice run, right? Now compare this to Uber. This is the weekly, right? Compare this to Uber. This right here. Hold on a second. Hold on a second. Sorry about that. All right. This right here, that's a weekly inside bar from the week before, and it's breaking the low of it, right? That is a sign to sell. Now, I don't know how far that's going to go, but that is a sell signal. That's a confirmation right there. And it's a lower high. This is a lower high, right? Lower. This high is lower than this high. See that? This high is lower than that high. That's a lower high. So if you've invested in AMD, this would be a sign to perhaps take something off the table. Maybe not if you're investing, maybe not the whole thing, but it's certainly a sign. Now you compare that to Uber. You see how that compares to Uber, right? Uber, there's nothing like this. But AMD, that's a sign. Now, how far does this pull back? Who knows? Does it pull back all the way to the swing low? Who knows? Right? So it's wise to take something off the table if you have a profit, and then perhaps you'll have an opportunity to add back. But at least you locked something in. Again, when you're dealing with investing, you're playing more of like a dollar cost averaging game. I just always think I'm very conservative, so I think it's a good idea that when you have a profit, it's wise to take something off. Now there'll be times, maybe AMD fakes you out. Maybe it gives a sell signal, and maybe it barely pulls back, and next week it's up here. You're like, I shouldn't have sold it. That's going to happen. That's going to happen. Okay. Like over here, look at this. There was a sell signal back here. Look at that. Right. And then a couple of weeks went by, and then it, I shouldn't have sold it. And then eventually you're like, oh, yeah, it was a good idea that I sold it. So it's all over the place. Just keep in mind that this broader structure is not exactly bullish, right? It's not exactly bullish. So its chances of pulling back to test the support or lower area are greater, in my opinion. Make sense? All right, so let's go back to Bitcoin. I hope that makes sense for you. I mean, nice charts there. It's interesting to see how some of these stocks, like Uber, for example, is basically doing its own thing relative to it's not following the Nasdaq exactly. It's close, but it's certainly, it looks relatively stronger, right? And that's the whole point of when you're working with single stocks. That's the whole point, right? Some stocks are going to be outperforming while others are going to be underperforming because it's going to be specific to their situation. With the driverless cars, everyone's all excited about the driverless, the Uber taxi, whatever, the driverless taxi. Everyone's having a party about that. So obviously that's going to be good for the stocks, right? Compared to some other company that maybe is not doing so great. How's Circle doing? Remember Circle? CRCL. We looked at this a week ago, right? What is it? CRCL. Remember I said it was a long? What was that? I know it was around 80 something or 180 something. I think that was around here, right? If we go back a week, let's see, today's Monday. So yeah, it was around. Okay, so this is where someone asked me about Circle back here. I was right about that one. I should have bought some. Look at this. So this is USDC that they produced the USDC stable coin. That thing's on its way up. That's, by the way, this is a wave 4 going into a wave 5. This is a very nice impulse structure here. Okay, look at that. Look at that. right? So it broke this wave 4 area, this little area high right there. So there's a good chance that this thing at least attempts to test the high, at least attempts to do that. Like that's a decent probability, you know? Man, I can only imagine all the people that got rich, all the people that, all the early investors who were in before that. Man, a lot of people blowing smoke up, you know where. All right. Anyway, I just wanted to take a look at that one real quick. All right, you guys. So I will leave you with that. My mouse is being a real pain over here. If you guys have any questions, you can send me an email or something like that. That always works. What else? Yeah. So remember, I'll stream. I'll stream on Wednesday at the AM session. We'll look at Nasdaq. Look for day trades on the Nasdaq using the Trade Scanner Pro. Remember, Wednesday is going to be probably a tough day. Okay. And since I know this in advance, most likely I will be extremely conservative or maybe not even trade at all and just watch. Very possible. We have to see what the price action looks like because price action may be very wild or it may be just like barely moving, or it could be anything. But when you have that type of sensitive news coming out like on a day like that, usually it's a good idea to wait until the market gives some kind of sign of what it wants to do. It's usually not a good idea to get involved until it decides, when a trend is clearly established. Sometimes that requires waiting. So we'll see what that looks like. All right. So Wednesday, that's usually 9:30 open. All right. Yeah, right. That's so I don't know what time exactly it comes out, but I would imagine Wednesday is not going to be an easy day price action wise. Okay. So yeah, so we'll see how that goes. All right. So guys, I'll see you then. Enjoy the rest of your day, the rest of your evening, wherever you're in the world, and thank you so much for watching.